Hey guys, a very good evening to all my crypto believers. So, have you all been curious about what's happening in the market? Don't you worry, the Coinmonks got you covered. Okay, so before starting with the updates, let's quickly quote today's headlines. Bitcoin crashed again today. Well, technically, it's still crashing. Polygon network gas fee skyrockets amid heavy NFT gaming. Will MATIC rally continue? Why Kevin O'Leary thinks NFTs could become bigger than Bitcoin. BTCS is the first Nasdaq-listed company to pay dividend in Bitcoin. So, let's start off with a refresh feed. Firstly, Kazakhstan has seen a surge in cryptocurrency mining since a mass exodus from China last year, becoming the world's second largest source of Bitcoin hash rate after the United States and ahead of neighboring Russia. According to the Cambridge Center for Alternative Finance, it now accounts for 18% of the global hash rate, a measure of computing power used to mine Bitcoin. While miners flocked to Kazakhstan partly because of its cheap electricity, the country's resources were quickly depleted. Kazakhstan is already dealing with a new energy crisis due to petroleum shortages, which have caused gas prices to skyrocket. Despite police repression, large-scale protests are taking place across the country. President Tokayev's administration declared a state of emergency and shut down much of the country's internet connectivity as a result. On Wednesday, Bitcoin's price fell to a one-month low amid a broader decline across stock markets. As US stock markets closed on Wednesday, the macro picture was unclear. According to Bloomberg, the Federal Reserve indicated that it may raise interest rates sooner than previously expected in newly released minutes. At the same time, the Fed hinted at the possibility of a balance sheet reduction resulting from such actions. So moving ahead with our next segment for today, we're going to talk about the layer 2 scaling solution from Ethereum over the last week or two. Polygon has seen a lot of on-chain activity. The NFT play-to-earn game Sunflower Farmers has recently choked the Polygon network due to heavy demand. Let's find out what exactly happened. The popularity of this NFT game accounted for a whopping 40% increase in gas use. After then, the second account only uses 3% of the gas. The Sunflower games have caused the gas charge on the Polygon blockchain network to climb by an astonishing 16% by the end of December 2021. The increase in the gas charge is severely causing many problems for several day apps. For example, the NFT rental protocol Double Protocol has stated that the release of Alpha Pass, which was expected for today, has been postponed. Sunflower Farmers, an NFT game, intensifies players by pitting them against each other in a furious struggle to harvest as many token prizes as possible. Smart contracts are used to distribute SFF token awards to gamers. As a result, players are continually engaged in duties such as planting and harvesting crops in order to earn prizes. These acquired tokens may be used to buy in-game NFTs as well as pay for other services. As a result, participants seeking a larger proportion of the SFF tokens are taking advantage of high gas prices, ensuring that their transactions are approved on Polygon. Despite the current spike, the Polygon gas charge is still quite low in comparison to Ethereum, where a single transaction may cost anywhere from $50 to $100. While the overall crypto market has been flat, Polygon's native coin MATIC has done exceptionally well. The MATIC price hit an all-time high of $2.87 last week. However, it has been trading sideways since then and has been crushed throughout today's market drop. Polygon is now trading at $2.14, which is its 50-day SMA average. We might predict a swift 15% increase in the short run if MATIC is able to reverse the trend from here. So moving ahead with our next segment for today, Kevin O'Leary stated he will hedge his bets and invest on both sides of the issue despite wagering that NFTs will overtake Bitcoin. Kevin O'Leary, a multimillionaire investor and proponent of cryptocurrency, believes that the NFT industry would be worth more than Bitcoin in the future. Let's have a look at the present scenario with our headline being: on January 5, O'Leary, also known as Mr. Wonderful, told CNBC's Money Connection that NFTs had a better chance of attracting capital than Bitcoin since they can tokenize and verify actual goods like automobiles, watches, and real estate. Over the next few years, you'll see a lot more movement in terms of completing authentication, insurance policies, and real estate transfer taxes all online, making NFTs a much wider, more fluid market than Bitcoin alone. Mr. Wonderful, on the other hand, confessed that he is not committed to that wager and will continue to invest on both sides of the issue. However, not everyone agrees with the analogies between Bitcoin and NFTs. CoinGecko digital marketing associate Kai Ren Kwan told Cointelegraph that it's probably not fair to compare Bitcoin, which is a single asset, to NFTs, which is an entire industry. However, because the sector is still in its early stages, Kwan believes that the NFT adoption curve in 2022 will only continue to rise. I believe that there is still a lot of space for growth across all NFTs, especially given that 2021 was the first year of the market acceptance. We now have set up a blue chip of NFTs, he said, but I believe the industry is only scratching the surface of what NFTs may be and achieve, particularly if the metaverse comes to reality. So wrapping up with our final segment for today, we're going to talk about BTCS. BTCS is the first Nasdaq-listed business to provide Bitcoin dividends. The shares of BTCS Inc. soared 32% to $4 after the firm said it will be the first Nasdaq-listed company to pay its dividend in Bitcoin. Let's have a deeper dive into this. The acceptance of cryptocurrencies and financial freedom is central to the BTCS ethos. BTCS has been committed to providing the infrastructure that supports blockchain technology since 2014. It is currently embarking on the next chapter of its quest to encourage the adoption of crypto and blockchain technology. Based on the Bitcoin price on the ex-dividend date, BTCS expects to pay $0.05 per share in Bitcoin. Those who do not choose to receive the dividend in Bitcoin will receive a $0.05 cash dividend. By giving the means to permit direct ownership of Bitcoin and other digital assets, we wish to reward our long-time shareholders for their continuous support and encourage financial freedom, said Charles Allen, Chief Executive Officer of BTCS. BTCS has a lengthy history of firsts in the crypto industry, including being the first US public business to mine Bitcoin, the first US public company to adopt a digital asset treasury strategy, and the first US public firm to secure next-generation proof-of-stake blockchains. By actively processing and confirming blockchain transactions, the company protects proof-of-stake blockchains and is rewarded with native digital currencies. BTCS's unique digital asset data analytics platform supports 6 exchanges and over 800 digital assets. In addition, the business plans to expand its suite of performance tracking tools to include more centralized and decentralized exchanges, wallets, and stake pools monitoring. Its digital asset treasury strategy, which focuses on disruptive non-security protocol layer assets, is essential to its business model and aids in its expansion. So we would now wind up with our assessment for today evening and meet you all tomorrow with even more interesting stuff. Until then, you may consider joining our Telegram channel for free crypto signals. Visit our blog linked below for guides, reviews, and tutorials, and subscribe to the channel and get daily updates about the crypto market. Lastly, with this little favor of Coinmonks, we hope you stay updated. Thanks for watching and have a nice day ahead.